Well, welcome back and another Talking Technical, and thank you for watching the show. And of course, we get during the week we always get requests, and then we have an opportunity to share it with you and actually analyze your opinions. And a lot of you are learning from this program, and some is actually saying to me that they've been watching the program for so many years, and that sometimes I discuss a share, but then they know in that sector you must maybe look out for something else because usually the sectors go in tandem. So if we look at the charts here, first of all, we must look at Tiger Brands. Now, I'm looking at the weekly chart here, and the reason why I'm looking at it, we called the share as a buy around, I think, this level of 142, if I'm not mistaken. I think it was when that trend line broke there. There you are. I just want to show you. Well, that's quite a long while back. That was around June. Then the share was at around 140, and look what happened. It gave us a beautiful technical goodbye kiss there. What happened as it started to bounce up? It moved above the 40-week moving average. That's, of course, very bullish and it's positive. But since then, I mean, the share really performed well. And the request was, Frans, I'm keeping the share for the long term. Is there anything that worries you on the chart? For me, simply, it's quite simple that the momentum is clearly to the upside. Now, if you look at it, since then, we've seen all the way higher lows on weekly charts. And of course, we see sometimes these spikes, these steep rallies that the share makes, but the trend is still 100% intact. I want to say to the viewer, look at that. There's, as I can say, the long-term trend is well established. The only thing that worries me is a little bit that we've got also a trend here. It's a little bit steeper. That will make me worry because usually a steep trend line sometimes trigger a sell-off. I don't know when that will take place. Maybe it's going to take place in time to come. But at the moment, it just shows you that the momentum is still wonderfully in place. And as we all know, this 40-week moving average is the long-term, as you can say, barometer for fundamental analysts. And they like shares if they trade above the 40-week moving average because then usually the fundamentals are also quite positive about the share. Well, above this 40-week moving average, and this is sitting at 173.43, the long-term view around the share will be positive. But of course, if you are a little bit nervous and you worry about the share and you see that the share had a wonderful rally, I will use this little support line there. And that's on a weekly close, of course, because I'm using a weekly chart here. And I mean, the viewer is a long-term investor. And that line sits at 183.62 cents. Now, below 183.62, we can see that the share can lose momentum. And it can go all the way down to 179.65. And then I think maybe we can reach for this 40-week moving average that I've just shown here. I will still remain positive above this line. But when this line breaks, and I think that can take place when this support line, and I just want to draw it in there, when this support line breaks, and that will be at 169.80 cents. Below 169.80, on a weekly close, I will get nervous about the share. But in the meantime, the momentum is clearly to the upside, and in actual fact, it's a beautiful chart. Well, let's look at Astral Foods. Now, first of all, Astral Foods is a massive company that supply, they manufacture, they distribute chickens and also products around chicken. So they also do some food. What we do know in the past is the moment the maize price, because maize is one of the major components if you've got a poultry farm, if the maize price is under pressure, Astral Foods usually do well. But if the maize price runs away and the price doesn't come back or doesn't give a breather and it just goes up, Astral Foods usually struggles. Now, I mean, the maize price had one massive rally. I've seen the maize price running, I think in this year, if I'm not mistaken, from 3,500 Rand per ton to almost 4,500 Rand a ton in a matter of a few months. So for me, if I look at the chart, and Why I'm looking at this chart is simply because the maize price looks like it wants to take a breather and it wants to come back a little bit. But if I look at this chart, look at it. From the high in September, from 219.90, let's make it 220 Rand, all the way down to 177. And this waterfall formation is quite a sell-off. Now we're starting to see a little bit of a consolidation there. And remember, this is also a weekly chart. So for me, if you are positive about Astral Foods, the first sign of strength will be above 178. But the other thing that worries me a little bit is this. And that's why I want to show you this line. There you are. And all of you should recognize immediately what I'm showing here. I am showing you a possible head and shoulder formation. There's the left shoulder. There's the massive head. And we may be working now on the right shoulder. That's why I'm saying that above that little line, let's call it 179.30, momentum can turn upwards. And the possible right shoulder can maybe be wiped off the table. But of course, let's just extend this neckline a little bit so that I can get the level for you. Of course, if the level of 165.60 gets tested on a weekly chart and the share starts to consolidate below that, we can maybe see that this massive company can come under immense pressure. And I'll tell you why. I hope I've got time to show the Brent oil price tonight to you. But if I look at the Brent oil price and it hovers around 100 and just below that, there's just no way inflation can come under pressure. And while inflation is high, these companies will see a higher maize price and they will struggle to make money. So if this line turns into a resistance, can you believe it that Astral Foods can maybe go down all the way to 135 Rand if the full head and shoulder payout? So that's the bottom line. We've got you can almost say a conservative target as well. That is not that extended. The conservative target is sitting at 154.91. Let's be positive. Let's hope that the share breaks above that 179 level. And if it breaks above that, use this. I'll give you that low. Use 166.45 as your stop loss. And then the share can maybe go back to 183.27 and even 194.56 in time to come. Let's look at another community of farming share, and that is Kaap Agri. Now they're very representative of the co-ops in South Africa. And I mean, this share has seen some ugly selling. I mean, it came all the way from 55 in January, right down to where it was the other day, 35.95. For me, I'm a little bit positive on the share. I say to myself, it's working on a nice base here. Let's draw in that line there. And this beautiful base is telling me that the share is maybe preparing for a move to the upside. And why do I say that? Can you see what I'm seeing? A left shoulder. I mean, there was a blip above that neckline, above that neckline. Then it developed a beautiful head. And here we're working on the right shoulder. And as long as we above this low of this right shoulder, I just want to show you that line there. While we're above 38 in, we can easily see that the company can work on this right shoulder, and if it breaks this neckline, this is the crucial point. If it breaks the neckline of 40 Rand and 50 cents, then we can see that this inverse head and shoulder can give us a beautiful relief rally. Now let's have a look here. We get the level there. That's the conservative target, of course, once again. And why do I focus on the farming that much? The reason is quite simple. Farming in South Africa is one of the sectors that is still making some good money. And with all the pressures in the economy, the farming community is managing some good businesses and they also make some money. That's why I like Kaap Agri, because what will happen is if the farmers are doing well, they will probably buy or spend more at the co-ops, and who will benefit? Kaap Agri. And also keep in mind that a lot of farmers has some shares, or you can say, you cannot say influence in the co-ops, but they've got some commitments there. And while they involved there, they usually do their buying there. And then that's why it benefits the company. Now, if it plays out, the first target will be 42.76. That will be the conservative target. And then if it plays out in full, it will be 44.31. My stop loss will remain at 38 Rand 18 cents. Let us look at Porche. The company listed a while back at around 80 Rand. And this share is listed on the Hamburg Stock Exchange. And I've got a friend that he was very, very keen to buy it, and he missed out. I don't know if he forgot or maybe went on holiday or whatever the case may be, but he missed out. So he phoned me and said, Frans, can you discuss the share, please, on the show? And the reason why I want to discuss it is because he wanted to buy it right at the top here. And this is, of course, a daily chart. Now, look at it. Since it listed from $81, it rallied all the way straight away 105. I mean, a massive rally. So I said to him, rather wait for a pullback, because look at this lamp pole formation. And you can apply this to any other share. If you see a lamp pole formation, just leave the share. It will give you an opportunity. So where's the support? I know we're out of time. The first proper line of support will be there, will be 96.32, and even if it goes a little bit lower, we can get it at 93.08. Always remember, a share always gives you another opportunity if you like the company. And by the way, just for interesting, the code of the share is P911. And why? Everybody that drives a Porsche, they will know that the Porsche 911 series was the winner for this company. Thank you for watching the show. We will chat to you again. Visit our website, www.fransklerk.com, and we'll chat again.